BLOCKTV, and today we're joined by Lou Kerner of Crypto Oracle. Now, Lou, thanks for joining us. First off, you are usually my go-to Oracle for crypto, but you started off on Wall Street, so hopefully you can help me shed some light here for me on the traditional markets. The markets seem like they're going up and then back to where they were, or are they? Even though the economy is shot, give me a rundown of what the traditional markets are doing right now.
Sure. Well, you know, there's that picture now that's becoming famous of Jim Cramer, you know, where it shows that the stock market made the record week. You know, the best, there it is, the best week since 1938. At the same time as, you know, we had massive jobless claims, and that's a week old because, you know, the jobless claims now are, you know, 50 or 40% higher than that, right? And so even though we're going through this, you know, economic global implosion, we're seeing the stock market is up meaningfully from its high. Actually, the bear market statistically is now over. It's the fastest bear market in history. And people are saying, well, why, if the world is imploding economically, is the stock market going up? And, you know, I think there are a number of reasons for that. You know, but first, I think it's important to note that the stock market, in terms of the multiple that you're paying, and, you know, there are different things that you can look at in terms of multiple. I personally look at, from a macro perspective, something called the Buffett Index, which shows the market cap, the total market cap over the GDP in the U.S. And it's a very macro view. And there you go. You know, that's a long-term view of it. And from that perspective, we're really at still very near all-time highs. We were at all-time highs, you know, a few months ago, in terms of the multiple that we're paying for the GDP. You know, so the market is still very, very expensive. And at the same time as the market's very expensive, you know, the multiple is, you know, generally highly correlated to two things. And one of those two things is the growth outlook. And, you know, the growth outlook, you know, while at the same time we're historically high multiples, we're at historically low outlook for growth. So, you know, we're really paying more for less. And the question is, you know, why is that? And I think, you know, the two main things that people are pointing to answer that, one is all of the money printing. You know, obviously, you know, we're printing more money faster than we ever have in the history of the United States. And this is obviously happening all over the world. So, you know, there's a chart, you know, that shows, you know, money growth slowly going up over time. And then, you know, in the last month, it shot up dramatically. So, you know, there is more money sloshing around. And what are people going to do with that money? Obviously, putting in the market is one of those things. You know, and the other is interest rates. So, you know, interest rates, you know, are going down in a lot of the world. There are negative interest rates. And so, you know, those are really, I think, the two factors that the market talks about. But I think there are actually a number of other things, you know, going on besides that. You know, and so, you know, if you take a look at, you know, one of the things is we're in a very long bull market. And so, you know, by any measure, you know, the people for the last, you know, really, it's almost 90 years going back to the Depression, but really over the last 11 years, anybody who has sold stock has made a mistake. And you have been rewarded every day for the most part over the last 11 years for buying on the dips. And so most people who are managing money, whether it's their own or managing it for other people, have been taught time and time again over the last 11 years to buy the dips. And so, you know, if you're one of those people, you know, buying the dips makes a lot of sense. You know, one of the other things, you know, it's an old Wall Street story, but there's this guy, Art Cashin, who very well-known market strategist. You know, he's been doing this for literally 60 years now, and he's still doing it, which is amazing. And he's got a story from the early 60s when he was just starting out trading, when there was a rumor went through the pit that there was a missile incoming from Cuba. And so he was selling and selling. And then his boss heard what he was doing, and his boss tracked him down and yelled at him, "What are you doing? You know, when there's rumor of a missile incoming, you buy, always buy on the missile rumor, because one of two things is going to happen. You know, either the missile rumor isn't true, in which case you're going to make money because you bought. And if it's not true, and if the missile rumor is true, you're going to die. So what difference does it make?" And so to some degree, you know, I know a lot of smart people who really do react. They don't care what is happening in the world. If a lot of people in the world thinks that the world is ending, they're out there buying, because their view is, if the world is ending, then what's in your stock portfolio is not going to be your biggest problem. And there are other reasons too. I mean, the one that I actually like the best of what's going on now is what we call in the stock market the dead cat bounce. So in other words, you know, markets don't go straight down. If you take a look at actually the biggest single day percentage increases in the history of the market, 4 of the 6 biggest daily increases have all been dead cat bounces. In other words, as the market was going down, there you go. You know, 2 of them happened during the Depression era in 30-31, and 2 of them happened during the mortgage meltdown in 08. And so as the market was going down, the market would bounce back up a little bit, go down, back up. And there's actually another graph you might have that actually shows from the 2000 stock market close, that it went down, and then you actually had a really sizable dead cat bounce up. Before then, you know, we had, you know, a few years of down, down, down. So there you go. So, you know, and this is where we are. So this is the peak of the market, and then you see it go down, and then you see it go up. And you know, that was a dead cat bounce. That wasn't real, but that was just, you know, again, it had paid off for a long time to buy on the dips, and so people were still buying on the dips, and you buy on the dip, and you buy on the dip, and then eventually, you know, like everything else, that works until it doesn't work. And I think the last reason I wrote about in the blog post was the fact that if you look back historically, you know, even though the market, you know, we know that, you know, the world economy is imploding. We know that the number of job losses that we have today is going to get worse next week, and worse the week after that, and worse the week after that. But if you take a look historically in terms of when the market bottomed relative to when the job market bottomed, you know, in 6 of the last 7 times, the market had its bottom, you know, long before, you know, many months before the job market bottom. And so, you know, you know, we have, you know, folks including, you know, Goldman Sachs out there saying the market is bottom. They say, you know, we know that the job market's going to get worse. We know that, you know, things are going to get worse. But, you know, if we look out, we see, and a lot of people do see, you know, a V, a V bear market, you know, a V economy. In other words, we went down sharply, and we're going to go up sharply. It's my view that what's going on here, you know, is massive dislocation across the economy. All of these different markets, you know, whether it's the job market, massive dislocation. All these jobs are going away. These jobs aren't, those same jobs, the majority of them are not coming back. So those people are going to have to find new ways to make money. They're going to have to be trained in new things. That takes a long, long time. So, you know, I'm of view that this is going to be a very long, much more depression-like than, you know, V-shaped recession. But, you know, everybody has an opinion.
Mm-hmm. That's very interesting. So you're taking a bearish take. Now you're actually, your reasoning was different from what I've been hearing elsewhere. It's very interesting. Whereas you're saying that there won't be the jobs to go back to. This is essentially speeding up what a lot of automation doomsdayers have been saying for a while, where there's a large portion of our workforce that are going to have to be trained in new skills very quickly, and that just takes time. What do you see, you know, as being a potential solution to this?
Bitcoin. I mean, there really isn't a solution. This is, we are capitalistic societies, still, we'll see how much that changes over time. But, the way that we operate is, we give, maybe some modest subsistence so people don't starve to death. And we do work to retrain them. But that takes, many years. And I think more than retraining, what happens is you just have, new people coming into the workforce who that's all that they know, they're young kids. And there's a washing out of a lot of the older people in the economy who simply don't have, the skills that are necessary today, and who also really struggle to get retrained. I mean, personally, my own father, went through that. He was a motion picture sound editor when the industry went to digital in the early mid 80s. And he just, he couldn't learn, this new thing. So I've lived that personally, and I think, we're going to have hundreds of millions of people living that personally around the world.
Well, what is it about the current situation that there won't be those jobs to go back to? Is it merely the global economy shrinking enough that there's not enough consumption, there's not enough demand for those jobs to be necessary, or are they just jobs that should have been going away for a while now, and this is kind of forcing the issue?
I think it's both of those, right? I think what you're seeing is companies, a lot of companies are learning, wow, we are going to learn they were really fat, that they could do most of or all of what they were doing with smaller workforces. There's going to be a lot less demand just because of the recession/depression. And there are also a lot of other things. We're just not going to be, even when we are spending money, right? People who aren't going out to restaurants, are realizing, we're going out to restaurants every night, and now they haven't gone out to restaurants. Their habits are going to change. They're most or a lot certainly of those people are no longer going to go out to dinner, every night. And there are lots of other, things, whether it's sports, going to the movies, things that we know aren't going to be happening for a while. And even when they do come back, most of them, if not all of them, aren't going to come back, to what they were before. Things like football. Which, in the United States, we're still, it's our biggest sport, massive, and even though in some ways it was in a slow decline because of how, massively, damaging it is to a lot of the people who play it. Things like that were going to happen maybe over long periods of time. I think, all those things are going to be shortened up. There are other things like virtual reality, that were growing that are now going to grow a lot faster because of how everything's changed.
Mm-hmm. Now, you're talking about, making dramatic changes from before to afterwards. Tell me about the incoming flood that is bearing upon us.
Well, sure. And this is, everybody knows, right? The printer goes burr. I've struggled for the last 3 years. As you said, I started my career on Wall Street. I was an equity analyst, spent my last 4 years at Goldman Sachs. And I really felt that to some degree, my job was, not only coming up with a good stock for people to buy, and markets are really efficient. That was a macro lesson I learned. So if I could come up with one good idea a year, that was a great year where I really saw something that other people didn't. But not only did I have to do that, but I had to come up with a way to explain the story in a sentence or two. Have a compelling, short elevator pitch. And I've always struggled with that in crypto. But for me, I came up with one that I really like, and that's there is with all of the money printing going on, right? I think anybody who has their eyes open knows that there is a flood of currency coming to market, spewing forth from every central bank in the world. And if you open your eyes and you understand how the world works, you can understand that Bitcoin is really our arc. And so the short elevator pitch is there's a flood of currency coming, and Bitcoin is our arc. So hashtag get on the Bitcoin arc.
Now, Lou, in this analogy, are you Noah?
I think there are a lot of Noahs. right? I mean, there were a lot of Noahs around before I, saw the crypto light in 2017, and now I'm just adding to the number of Noahs out there, and I think the number of Noahs will grow and grow. And it's hard to know what's going to tip, such that the large numbers of people around the world open their eyes to the fact that there is an arc to get on, and that they can not only survive the flood, but they can actually thrive during the flood. And so, I'm going to be spending a lot more of my time being a Noah, and I think every day there are going to be more and more Noahs out there, and eventually that message is going to get out there.
Mm-hmm. Now, let's speak about that arc a little bit. Let's speak about Bitcoin. Right now, it's trading about 7,000, 7,500. How come, people aren't flocking here? How come it's not skyrocketing? Is this simply a case of everyone else in disbelief, everyone else not understanding it? Why is Bitcoin trading like it is?
Sure. Well, I think there are a couple things going on. I think, first, obviously, the number of people who own Bitcoin really is 0%. It rounds to zero. I tried to teach my kids that buying a lottery ticket doesn't change your odds of actually winning the lottery. It's still zero. And so, really, this is even 11 years in, so few people actually own any Bitcoin. It's really zero. And so the question is, how do we get that message out to the rest of the world? And, I now have my elevator pitch, right? There's a flood coming, get on the Bitcoin. There's a fiat flood coming, get on the Bitcoin arc. And what's great is there are lots of other people out there, lots of other Noahs out there, with different pitches, different ways to get people to understand what's going on. And I think different people are going to be able to see it in different ways. So the more Noahs telling more narratives, I think the better off we are. And slowly, it's that saying, slowly and then suddenly. And I think that's going to happen to Bitcoin.
Mm-hmm. Now, we can't speak about Bitcoin right now without speaking about the upcoming Bitcoin halving, where miner rewards will be cut in half. Now, there's been many predictions about the halving going forwards. Do you think that this current scenario, with the fiat being printed at record rates and flooding the market, as well as this economic uncertainty, recession, depression potentially, do you see that having any effect on the Bitcoin halving?
Certainly, historically, the Bitcoin halving has been a very positive event. And so I assume it'll be a positive event again. It certainly, as a narrative, even a very short narrative, it's another signpost to say, look how this is so different from the flood of fiat that's coming. In fact, in some ways, it's receding in Bitcoin. It's not a flood. But it is actually, you have to go pretty deep into Bitcoin, I think, to really appreciate the halving. And I think most people who are going to be buying Bitcoin, over the next year, 5 years, 10 years, will probably not have that deep of an understanding of Bitcoin, other than understanding that I think the main thing to understand is that it's decentralized and that it's an algorithm. I think, as opposed to everything else, there's a man in the middle solving for himself, and that's why we have the flood. That system is broken. Now there's a new system that we can believe in that isn't broken, and we know it's not broken because it's just an algorithm.
Mm-hmm. Now, lastly, right now we spoke about last time you were here how Bitcoin deposits were low, and now reports saying $7.6 billion are sitting in stablecoins. Now, is this good news for Bitcoin? Is this simply stablecoins, money in stablecoins are just waiting out the market to then put it into Bitcoin, or is this bearish for Bitcoin?
Oh my God, I think it's incredibly positive. Look, the idea is the first step is get people into digital currency to understand what that is. And so, certainly, I think the easiest way to come in to digital currency today is through a stable coin. Whether it's Tether, and there are a lot of new interesting, or DAI, obviously, which I'm a huge fan of as well, and that it's completely decentralized. But there are also other new interesting stable coins. I'm a big fan of Saga, as a new one, and this is when it's actually a basket of currencies. So rather than just Tether, it makes certainly a lot more sense to have a basket of these currencies, and then Saga, over time too will become more or less correlated with the other currencies.
Mm-hmm. And as of now, right now, as it sits, as this, the main headline, let's say, or the main topics we were speaking about right after the traditional markets crashed, right when the pandemic started hitting, you're immediately rushing to, is Bitcoin a safe haven? Is it keeping its safe haven status? Is it not? How does it compare to gold? Those were all the narratives. Now that the market, or traditional market, is going back up again for various reasons, as we spoke about, how does that change your view on Bitcoin right now as a safe haven asset?
It doesn't change my view at all. Bitcoin is what Bitcoin is, and the question is, how do we get other people to understand that? And by the way, Bitcoin can become a lot more things over time as well. I think it has, these unique properties that don't exist anywhere else. But certainly, this idea of Bitcoin as a digital gold, Bitcoin as a safe haven, that exists. That is real. And now the question is, are enough other people going to understand that we're going to get the Bitcoin moon that everybody, including myself, believes is ultimately going to happen because of these unique properties that Bitcoin has. That said, there's a great poem, one of the lines is, if you can trust yourself when all men doubt you, yet leave allowances for their doubting too. Just because Bitcoin's better, maybe it won't catch on. Maybe for whatever reason, it won't happen. But it's my strongly held belief that it will happen. And the better narratives we have, and the more narratives, the more no's we have out there, those are all elements that I think are going to work, and slow until fast.
Well, Lou, I have an elevator pitch for Bitcoin for you. The safest place to be right now in this global pandemic is on the moon. I'll see you there, Lou. Thank you so much for joining us here today, and for all our viewers at home. There we go. And for all our viewers at home, if you want more on blockchain, crypto, and tech news, make sure to check us out at blocktv.com.
Watch us on Amazon Fire TV and Roku.